You think all this can last? There's a storm coming, Mr. Wayne. You and your friends better batten down the hatches, because when it hits, you're all gonna wonder how you ever thought you could live so large and leave so little for the rest of us.
I'm in charge.
Do you feel in charge? I'm necessary evil.
It's a stock exchange. There's no money you can steal.
Now why are you people here?
Criminals thrive on the indulgence of society's understanding.
Welcome back. This is Not Your Advisor with NYU Grad on Wednesday, FOMC rate cut September 8th day. We have a lot to cover, and some of it is going to be theory, and some of it is going to be practice. I have my glass of whiskey. I am locked and loaded, and I'm ready to cover today. So buckle up, Buttercup. So basically, the Fed panics for the bank of friends. That's basically what has happened today. And I stated previously multiple times to expect various fake outs throughout the day. And today's action, today's price action cannot be looked at with confidence. It was like a hurricane. It's as if your neighbor said, you know what? My new roof survived the hurricane, category 5. Was that the roof? Or was that just luck and the hurricane missed the house? So if you made money today, congrats, you got lucky. If you lost money today, sorry, it really wasn't your fault. It was the Federal Reserve. It's best to just steer clear of days like this and to wait till after the dust settles. And I don't think the dust actually has settled yet. So what happened today at 2 o'clock? The Federal Reserve has cut the rate by 50 basis points. It's really not a big deal. 0.5% on the Fed funds rate. They're already late. Look at the 10-year Treasury. It has fallen from 4.7 in April to 3.6 now. So about 100 basis points. I can do math. So they're saying they're going to cut another 50 basis points. So, 10-year yield might go down to 3%. Your money market funds will pay you less. Mortgages will be maybe 0.3% lower. What's really going on is that they're trying to give a life raft to Jamie Dimon and all of the banksters. I've been sharing reports of many other smart individuals like Melody Wright, Adam Taggart, about real estate mindset, Nick Gerli, about how effed up real estate is right now, both residential and commercial. Triple Net Investor on X, which reports heavily on commercial buildings. These buildings on the commercial side are still 30-40% vacant across the US. You might have seen Amazon CEO saying, you must come into the office 5 days a week or else. Well, I'm telling you right now, if you live in California, if you live in New York, especially New York, the subways are dangerous. The Metro North, Long Island Railroad, and the New Jersey Transit System are in shambles. I have friends that are VP level at Amazon. I'm not going to say which division because then it's going to whittle down who these people are. They are sick and tired of commuting in from the outer boroughs into Manhattan, even 3 days a week. Nobody I know who used to live on the island of Manhattan, not Queens, not the Bronx, not Staten Island, not Brooklyn. I love the boroughs, okay? But I'm talking Manhattan proper. All of my well-to-do family friends who have moved out during COVID to the likes of Long Island, Westchester, New Jersey, not one has come back to Manhattan. Even the folks that moved out of state to like Florida, not one single family has moved back into Manhattan. So I'm just talking about Manhattan. I can't speak for, Amazon's based in Seattle, Washington area. I can't speak for that. But I know Manhattan. I know the tri-state. I was here from 1980. Those people are not coming back. And if you ask them to commute round trip 3 hours every day, they're going to leave. They're going to leave Amazon. They're going to go to Google or other companies that allow remote work. I'm going off on a tangent here, but let's keep peeling this onion. It's going to be all over the map, folks. So I'm going to get back to this whole real estate stuff in a second, but I did want to give a quick shout out to my mentor, Bill Cara, who posted rightfully, and I'm going to try to quote him in a second, but if I had to wrap up the day outside of, the Fed panics, basically they can no longer try to lie that they were fighting inflation, because they never really were. Yeah, they went from 0% to whatever, 5 point something percent to fight inflation. But inflation is raging at like 18%. In order to fight it, you need to get above the rate of inflation to fight it. So this whole time they've been lying, saying they're fighting inflation. But because of this other massive fire going on with jobs, the economy, and commercial real estate for their banker friends, they're going to continue to lie that inflation is in check. And they have enough slack because they've done such a great job that they can cut 50 basis points, and they can cut again next quarter, and they can cut a few times next year. This is your tax dollars at work. How effing corrupt. I'm just going to throw this out there. If I was a supreme ruler, I would be stringing up all of these people in government. Whether they're Democrat, Republican, I don't give a F. They all report to the same color, green. All right. So I'm going to quote Bill Cara, who notes that this is more about the bankers who are drowning in commercial real estate debt. And I agree. It's definitely happening. I'm going to quote, and I'll link it in the show notes. The big Fed policy rate cut points to its real concerns. And I'll link the article. Quote, commercial real estate is collapsing, hurting mortgage lenders, including humongous bank and broker. That's basically Bill's nomenclature for the sell side. So this 50 basis point cut will relieve some pressure and assist the investors in declaring bankruptcy. Courts will now put a hold on seizures until these failed investors get refinanced. Not immediately, but after the Fed drops rates further. Adding liquidity, which rates cuts do, will increase inflation, hurting the average person. Today's Fed action shows the split between Main Street and Wall Street. End quote. My dog is also cursing at the Fed. You can hear him. Everyone's upset, including my dog. All right, so I'm going to pause here before I forget. My prices are adjusting after today. I feel inflation too. I'm drowning in inflation, Jerome. I don't know what you're talking about. So after tonight, my annual premium subscription will be going to $325. If you want to subscribe monthly billing, it'll be $34. That is still 17 to 25% below average in the finance investing category in Substack, and I still feel I'm underpriced. But if you can't afford it, I'm sorry. It is what it is. But you're going to need not only myself, but the community that I'm building in the private community for premium subscribers. This is not going to be for the faint-hearted in the next 18 to 30 months. I guarantee that. All right. So when you look at the summary of the day and you kind of take a helicopter ride and look at the macro, it wasn't actually that bad. It was really a nothing burger. So let's look at how indices closed and breadth numbers, etc. The market itself was down like 0.25% on average. No biggie. But it's the complexion that's really important. The Dow closed down 103 points, down 0.25%. The NASDAQ closed down 54 points or 0.3%. The S&P 500 closed down 16 points or 0.29%. It did basically nothing all day leading up to the Fed rate cut decision, the press release, and then the podium speech. But let's dive into the complexion here. So you had the majority of the Mag 7 red. Microsoft was down 1%. Nvidia was down almost 2%. Amazon was down 0.25%. Tesla was down 0.3%. Meta was up 0.3%. Google was up 0.3%. Apple was up 1.8%. Taking a quick look at sectors, you had pretty much every sector red for the day except for communication services. But I digress. I completely did not cover breadth. I'm so sorry. There's just a lot on my mind, and I'm just speaking from the heart today. Oh my God, before I go cover breadth, the whole intro. How can I not cover the intro? Sometimes Hollywood and movies can explain real life. And when you take a look at the whole story arc of Batman, I think it sums it up very well. Gotham City, New York City, just everything going on with the country, everything going on with New York, with California, all the crime that's going unchecked. Who is running all of this? Who is holding anyone accountable? It feels like I'm Harvey Dent in this Batman movie, and I'm just one bad day from becoming Two-Face. So that's why I picked all of those little vignettes from the Batman series. But let's jump into breadth numbers. We had 1,281 new highs versus 111 new lows. We had 36% of stocks advancing across the NYSE versus 59% declining. 34% of stocks were below their 50-day, and 34% of stocks were below the 200. So when you take a look at the whole macro picture, not much change. And again, today's price action, you should not put too much weight on it. It really was a hurricane. But I have so much to cover today. Let's keep going. So when you take a look at, I'm going to post screenshots of 2 p.m., 3 p.m., and 4 p.m. today in the show notes. So if you are a free or paid subscriber, these images, these screenshots are available in the show notes on Substack. If you're listening to this on a podcast, I urge you to click on the link in the description or go to nyugrad.substack.com and you will see today's show notes. And in those show notes, there are content divvied up between the free and the premium content. So this is still all in the free part of it. So at 2 o'clock Eastern, New York, Gotham time, the Dow Jones Industrial Average, right after the whole 50 basis point cut news came out, the Dow was up 271 points at 2 p.m. Eastern. The ES futures were up 41 points, or almost 0.75%. The NASDAQ futures were up 179 points, or up almost 1%. The Russell 2000 up 1.6%. Why is that, NYU? Why is the Russell leading? Well, when you have rate cuts in the U.S., that is helpful for domestic small cap companies that are starving, that are drowning, that are choking on their debt load. They can no longer pay their bills. They can no longer pay their payroll. They need to refinance. They need to do down rounds. And they need to keep away the private equity pirates from taking away their company so that they don't have to move from Marin County to the Inland Empire of California. So that was 2 p.m. NVIDIA was up almost 0.75%. Amazon was green. Meta was green. Microsoft was green. Apple was green. Google was green. Tesla was green. The VIX was getting crushed. We were at like $17 on the VIX. It was down like 3%. Breath Valdi was skyrocketing. Everyone was giddy about the 50 basis point cut. Gold was soaring because the dollar was getting trashed. All right, let's fast forward. 3 o'clock. At this point, Jerome Powell was singing into the microphone. The Dow Jones was down 43 points. The ES futures was down 5 points. Not much big deal. It was just a shock it was red at all. NQ was down 11 points. The Russell was still positive, 0.75%. NVIDIA was going red. Amazon was green, barely by 3 cents. Meta was up merely by $2.70. Microsoft was red. Apple was up 1.3%. Alphabet was up 3 cents. Tesla was up $2 and change. The VIX bottoming, now at $18.20. Valdi or Breath was still pegged to the downside now. It was now selling off. What the F is going on here? GLD, which was skyrocketing because the dollar was getting trash and cut rates. Now GLD is selling off. What the hell is going on here? Let's all take a breath. Let's all take a sip of our whiskey. Let's fast forward 4 o'clock. The close. The 10-year yield is up 1.18%. What the F? Dow Jones Industrial closed down 100 points, down 0.25%. ES Futures down 18 points, down 0.3%. The NASDAQ down almost 100 points, down 0.5%. The Russell down 20 cents, no big deal, but still red. Nvidia down 1.8%. Amazon down 0.25%. Microsoft down 1%. Tesla down 0.3%. The VIX now at $18.40. Vol D pinned to the low of the day, which is breath. GLD pinned to the low of the day at 235. What the F? So that was the last 3 hours of today's session. I am telling you, we are on a march for lower prices, but we may still see new highs. Huh? What are you talking about? I believe in the next 18 to 30 months, we are going to go much lower. But within that time frame, we're going to see headline shocks. We're going to see manipulation. We're going to see buyback news, stock split news, brand new dividend yields, yield increases. And we have earnings season coming out. This is not going to be for the faint of heart. It really isn't. And if you don't subscribe to my Substack on the premium side, that's totally fine. I get it. You can't afford the $34. You need to talk to your estate planner. You need to start talking to your financial advisor. I ask multiple times in polls, in Substack posts, this time, are you going to sell before Wall Street? And in that poll, majority said yes. I say BS. I call bullshit. I believe the majority of people will not sell before Wall Street, will not sell before Warren Buffett, will not sell before the sell side. Because psychology is strong. FOMO is strong. My text message thread at 2 o'clock was like, you better get in. You're going to miss the 5-bagger. I am telling you right now, you better buckle up and start talking to your financial advisor. Or subscribe to my Substack on the premium side. I don't know what else to say. I really don't. So the 10-year yield, what stuck out was it was green just a little bit. It was up like 6 cents or 6.06 points. It obviously fell in the beginning of the whole release, the 10-year yield, because they're announcing rate cuts. But why the hell did it bounce? Why the hell did the 10-year yield go green? We need to see more cards coming out of the deck. But one thing I want to kind of share anecdotally is I think Jerome Powell is not driving the bus. He's not in control. If you look at the 10-year yield from April, May of this year to now, we went from 4.7% to 3.7%. This was during the whole time that the Federal Reserve was saying we are data dependent and we're going to hold rates steady and everything is under control. Do you remember that? I'm sure you do. And now that the 10-year yield is at 3.7, they cut 50 basis points, and now the 10-year yield is sticking its middle finger and going higher. So there's a lot of cross currents. I don't know the future, so this was a little curious to me. I think my knee-jerk reaction here is that when they announced the 50 basis point cut, a lot of those people who are in my text thread and on Reddit, on CNBC, are saying, oh, I need to buy NVIDIA, I need to buy risk assets, I need to go long. So they sell TLT, they sell bonds, and they go into the Mag 7. And if you sell bonds and you sell TLT, because of the inverse relationship, bond prices go down, TLT goes down, yields go up. It's the only reason I can think that today, of all days, when they cut for the first time, and then the largest cut since 2008, that the 10-year Treasury yield closes green. If you know more information than me, maybe Aloysia, who writes Metals and Oil and Mine and everything else, will reply in the comments. I'm very curious about that. I am not going to cover what was strong and what was weak today, because again, if your roof survived today, it was completely luck. If you were green or red, it was the whims of one man giving the mic a blowjob. So that's all I have for today on the free side. You really need to start talking to your financial advisor, your financial planners, your estate planners, your significant other, your spouse. When are you going to retire? Are you too heavyweight in bullish equities? Do you need to diversify outside of equities? Pay off debt, maybe? Maybe sell your home and rent for a few years. You need to start having these conversations and explore these conversations now. Free members, the pricing changes after tonight. I want to thank you all for being a free subscriber. I don't want you to take the price increase personally. I have been over 45% underpriced until now. You have about 7 hours to sign up at this current price before the price adjusts. Afterwards, if you can't afford it, I am sorry. Premium members, please stay on. I want to go over some charts with you as well.
Have you seen what it's like out there, Murray? Do you ever actually leave the studio? Everybody just yells and screams at each other. Nobody's civil anymore. Nobody thinks what it's like to be the other guy. You think men like Thomas Wayne ever think what it's like to be someone like me? To be somebody but themselves? They don't. They think that we'll just sit there and take it like good little boys, that we won't werewolf and go wild.
You finished? I mean, there's so much self-pity, Arthur. You sound like you're making excuses for killing those young men. Not everybody, and I'll tell you this, not everyone is awful.
You're awful.